Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And welcome to season 9. And today I have an amazing guest. He is an advisor at Calibrio. His name is Vadim Nestorenko. Vadim, welcome to the show.
Yeah, hey everyone, thank you for having me.
You're very welcome. You're very welcome. So let's kick things off, and I'll ask you the first question. Ask everybody, is get amazing answers from everybody. Is what is your background, and is it a logical background for what you're doing now?
Yeah, sure. So I'm a product and growth manager and a DeFi researcher. And I got into crypto in 2017 pretty randomly, as many. I guess I just finished my bachelor's, and education-wise, my background is in economics, finance, so there is some like logical extension right now. But of course, I never thought what I'd be doing, what I'm doing right now. And yeah, my friend invited me to apply for investment analyst position at VC firm, in a crypto VC firm. And at the time, I had my Europe trip planned, so I'm gonna do it later. And I think I was a bit lucky that position was still open. So I started working at that company. Honestly, I wasn't understanding a lot what's happening. Everything is new. I was basically analyzing a bunch of ICOs, but I been thinking like, there is something more to it. So the next years, I just was learning how blockchain really works, or the fundamentals, technicalities, and I remember at 2019, it was November, I guess, when I first used DeFi lending protocol Compound V1, and I was like blown away because like finally there is some use case where what you can really use something in crypto, and besides just making any exchanges. So I decided that I want to work as a product manager at like any DeFi project, and it was a bit challenging because there were not that many DeFi projects at the time, and I wasn't, to be honest, super experienced product manager. And there was this conference, ETH Denver, in 2020, and I had to borrow some money from my parents so I can go there. And I met a founder who was building a decentralized insurance protocol. So I started working with them, and like my official week of the job, there happened a COVID crash, and that Black Thursday event with MakerDAO, and our team, we built like at the time first public liquidation pool that accepted DAI and acted as a backstop for MakerDAO and then Compound and other protocols, so not to allow this debt. And after that, I was mainly working independently, doing various DeFi research, investments, and later I became more interested in some real problems that's happening in crypto, and it led me to MEV and everything that's related to the flow, and yeah, and I met the founder of Calibrio, and I started working with them, and I led a couple of products, retail facing, and yeah, that's briefly my background.
Awesome. I'm also the class of 2017, and
Nice.
I came in as an ICO advisor as well. So, and that was crazy. So, it's a little more
It's
tame.
true.
It's a little more tame now. So, Calibrio, I want to find out what that's all about, including, your role as an advisor, but what, your vision and your mission, and how you support the team and the project, and your outlook is.
Yeah, so Calibrio as a MEV infrastructure project, so there was a big problem with sandwich attacks, and like everything related to the when the trade is happening and there are like a lot of externalities that touches users, infrastructure, and especially after the Ethereum went to proof of stake, there are like more roles and more open problems. And what essentially is Calibria is doing is order flow auctions. It's a concept. It's a layer on top of how the transactions are processed in Ethereum. So essentially, it's allows to protect. So it's reroutes trades from public mempool directly to builder validators, and it helps users being protected from sandwich attacks. And also, if the trade of the user creates some arbitrage opportunity, this user's trade is being auctioned to searchers, arbitrageurs, who like bid, who will give back most of the value to users back. And when we started, at that point of time, like 10-15% of swap transactions on Ethereum were private. Right now, it's around 80%, and it became a popular tool like to protect users and return the value back to them. So that was the main product. And when Calibria launched its B2C sub products, I was leading it from like product perspective and growth perspective. It's called Meow RPC, which essentially like any user from like MetaMask or any other wallet can add this RPC and being protected. And also we built Telegram trading bot, which allowed like users quickly buy and sell coins, namely meme coins, from Telegram. And I've been working on this. We've been working on this for a year, and I was leading product and growth there as well.
Awesome. So I'm going to sound like I don't know what I'm talking about, but I have to ask the question because I don't know the answer to this, and I should, right? What's a sandwich attack?
Yeah, sure. So generally, it's front running. It's this concept exists in traditional finance, but it's illegal when in crypto on decentralized exchanges, when a user makes a trade on Uniswap, for example, their transaction is visible on mempool. That, for instance, I gonna buy 1 ETH, and more sophisticated actors place their buy transaction before mine, essentially pumping the price a bit and then selling after me right away. So essentially sandwiching me. So I'm buying like not at fair market price, more expensive, and that's my loss. So essentially, users lost like around 1 billion for the past few years due to this sandwich attacks.
Okay, so you're paying a higher price. If it's a meme coin, you're going to lose because meme coins go. Most meme coins, 99% of them go to zero. But say it's a layer one, then eventually you're going to make it back, right?
It like, first of all, it doesn't really matter whether it's meme coin or any other asset. So essentially, when you buy something, someone just buys before you and increase price for you. And with meme coins, it's more dangerous in particular because meme coins are more volatile and users, they set more higher like slippage tolerance, and essentially this is like how they allow price to be different. And essentially this front runners, they, so essentially this is their profit margin. And sorry, the last part of the question I didn't hear.
Well, no, you explained it. So you basically have two options: you're either screwed or you're really screwed. So,
well, and so these solutions like order flow auctions, they became popular on Ethereum, on Solana, and all these like Telegram apps, some web terminal they integrated by default, so users even don't know that. So they are protected, so they actually are not screwed. if they use this. But it was a long way since this became adopted, because it's more sophisticated tool and not everyone understands it because it's like really complicated. So many are integrated by default. So, but yeah, on Solana, for example, it's still crazy how much people are losing to this like front running. So yeah.
So I'm gonna get into. I think I'm gonna get an MTV to MEV a little later.
Yeah.
Yeah, MTV is out the window. So I want to find out. You've built for years in the space. So what are some of the lessons that you've built that you learned when you're building and scaling blockchain products that over the years that apply today?
Yeah, the first thing that comes to mind, that because crypto is very versatile and very interdisciplinary, that you have to have a bit of experience in all directions, and you have to follow all the meta, because I think one of the challenges building an application, a lot of things are fragmented. You have some developments on layer 2, you have some developments on layer 1, and like some pass keys are being added, and a lot of things you have to combine together. So you have to follow all the things, and they're constantly changing. And most of the time, it can be just a narrative, just a trend. So you have to balance, like whether you're following the narrative and trend, or whether it's like real things that will improve the experience of your users. So I think that's the real challenge, because again, there are like, as there's this joke that more products or more projects than there are users. So, but you have to follow this to understand this, whether you should incorporate this or not. So that's the first one. And the second one, I think it's maybe a bit obvious, but because in crypto there are a lot of technical people, engineers, sometimes it's, I think, being overlooked talking to your users, not just to your community, but generally to your users. A great example was Pump Fun, which is the meme coin launchpad. The founder shared some time ago that before launch or at the launch, he called, DM'd 3,000 of people asking feedback on their app. And I think it's a good example that you just like have to be close to your users, constantly talking to them, asking to them. And in my experience, we had a separate group with our like top users, and I was like their hotline 24 hours a week, a day, and 7 days a week, like talking to them, listening to their feedback, what they want, like something bad. So you just have like to be with them all the time. So I think these are two main things from my perspective.
I want to dive down the narrative a little bit because I saw something overnight, and it does. I mean, it's good for me, but it doesn't sit well with me. You saw the price of Avalanche. I don't know if you should talk about price on my show, but it went up like $5 overnight, and throughout the whole entire night, I saw so many posts on Twitter, on X, about AVAX doing this, doing that, and then one person posted, and I saw this. There was a $30,000 bounty tweet program, and I'm like, people are tweeting so they try to win that bounty, and I'm like, to me, it seems like market manipulation, because when that program is over, the price goes back down, and the price is not based on fundamentals. It's based on a narrative and activity. So where do you draw the line of like the different, like what is legitimate growth versus what's a pump? How do you navigate that narrative? Because if you're not on X, you wouldn't know. You would just say, okay, the price is going up, must be being used now, but it's not. So what are your thoughts on that?
Yeah, that's quite a complex question. With these programs, it's definitely a pain in the ass, with especially with like AI, and there's a lot of spam. It's like impossible to use X. And yeah, so the fundamental question is like organic growth and like the price and the pump metrics, especially if the chain is on testnet, you can have like, I don't know, 500,000 users. It's really hard to differentiate. I think it's for better or for worse, it's what it is, and I think you just have to use it. People will come to use your application, I think, regardless initially whether there is some value or not, because they might expect some financial reward, like airdrop or stuff. But some might stay, and anyways, you can get some real insights for your product and improve. And then, of course, it's a challenge to retain this audience. And if I think if you design your like token or your incentives program more like, I don't know, more honestly, you, even though you will lose some not organic audience, I think it's still you can benefit from that, like to gather some again insights and to improve your main product and then go from there. I mean, sometimes also regarding price and the products, there is like also a joke in investment circles, like never use a product of a token you're holding, because you can be disappointed, because sometimes as an investor, it's some different framework you analyze the product. It's not just the utility, but some, I don't know, mind share and many other parameters. So sometimes they do not correlate, but in long term, I think there is still they're linked, the price and the product, although not necessarily, because we have plenty of L1s that do nothing, not do nothing, but not that many users, but still they have good price. So yeah, I think it's just inherent to crypto, but you can take advantage from that if being smart. So
Great, great. So you learn something new every day, and learning something new and seeing, where organic growth is, that falls into this realm of research, right? So I want to find out, what's the evolving role of research and investment and the community, right? In verticals, especially like you mentioned DeFi, but also like NFTs and gaming, which rely on them too. What's the evolving role of that research?
mhm. Well, I can comment mainly on DeFi. To be honest, I'm not really following NFT and gaming markets, so I'm not sure I'm qualified to tell a lot about that. But for DeFi, well, finally, I think that there is a bit of shift, as I think, from just doing research to moving more like from product perspective, trying to improve like user experience and build your app, your product as an app. So because again, there are a lot of solutions, a lot of projects, but not that many users. So that's I think it's a good dynamic, because I think that there are already a lot of great building blocks what an app developer can use, like to combine and make a really good um, application. So I think there is less maybe research needed, like fundamental for new teams coming. You have like to spend less how like gas on that L2 works on that L2. So so yeah. But still there are a lot of open problems, and I think there always will be, and there are more left to more teams who are interested in this design space. But right now we see that still there are like shifts more towards application building rather than like finding a new IMM design or a new high performance blockchain. But it's still popular nowadays, but uh, getting less and less popular.
Got it. Got it. Yeah. So I see research a little differently than a lot of people. A lot of people build something and then they try to find a user. And I come from the corporate America world where you find the person's pain point and and what their area of need is first, and then you build it. So, regarding DeFi, regarding that infrastructure, that need, the innovations, how are the MEV and other innovations shaping DeFi's future, and how's that going to affect institutional adoption?
Hmm. Um, so regarding MEV and infrastructure, so because MEV it's quite a broad term, so again, initially, like the definition is that what like maximal extractable value. So essentially, it's what validators they get for ordering the transactions. So because this front runners and arbitrageurs pay them, but because most of the use case in crypto is swapping, most of the activity on chains is exchange, and it touches everything. So it's not just some isolated infrastructure. It touches raw routing. So if you wanna make a swap, uh, it involves MEV, and I think how the exchange right now is happening, it's greatly improved for the years. Right now, there are a lot of market makers, solvers. When you make a swap, it's routed through different IMMs. It's routed through private market makers who route from centralized exchanges. So users are getting like more fair market price. But it's not just about better price. It's also right now we're having this cross-chain exchanges more and more popular, and these are usually the same participants who are doing MEV because again, if we go back to the transaction supply chain, so for instance, when user makes a swap, it goes to a solver who like define the better price, or there is this arbitrageurs, and there is this block builders on Ethereum who build the blocks. Usually, sometimes it's the same entity. So so they essentially for better or worse they shape the how things are happening, and it's I think it's for the better. Mainly, it doesn't introduce a lot of like decentralization risks. So yeah, that's the first part. The next is UX first, like layer 2 becoming more and more popular, but there are a lot of chains, and still, even for advanced users, you have, for instance, USDC on many chains, and you can even have like two versions of USDC on Arbitrum, like previously, and there are a few projects that are like trying to make you have like one balance on all chains, or more smooth cross-chain swaps, and also the participants like on infra level who are helping like to facilitate this exchange, they're involved in this MEV. So essentially it's everywhere in many small things, and so yeah, I think this is how they impact the DeFi. And yeah, sorry, and even again, the small things, like for instance, when you can get a reverted transaction, or when your transaction is stuck. Right now, it's also solved on like order flow, auction level, or tools like this, and it's very small things, but it's a significant improvement what we had previously, and not many people are talking about this, like about account abstraction, but it's still happening, and I think that it's greatly improved the experience. Yeah.
I've had a number of podcasts in previous seasons that went over account abstraction, so it's good to hear that it's still being worked on. You know, um, I know you were around in 2017, so you definitely were around in the summer of 2021.
Yes.
When everything became a little fun. You know, um, we've all been looking for the fun since, and the fun hasn't happened yet, but the DeFi space is very different than it was 4 years ago, right? So, what trends, improvements, have you seen happen over the past 4 years, and where do you think we're headed in the next couple years?
Mm, yeah. Finally, one trend that I think kind of obvious right now and very popular, and it's was like a DeFi dream is as buybacks. So what we see like Hyperliquid and other projects that finally, when it's a natural model, when there is a real product people use and they have some cash flow and they buy back their tokens and they align users and then they use it's like huge network effect and flywheel and this sector of tokens who are making their buybacks are the most performing right now. So it's kind of nice to see that we finally have it. Also, like what we had in 2020, 21 in DeFi, there are a lot of DeFi derivatives. And I think maybe they didn't find a lot of traction because either of complexity of or maybe like infrastructure wasn't ready, like because like expensive transaction and stuff. And so what I see, because a lot of promise was like that with IMMs that a lot of things will be like outsourced for some retail audience, but right now we see that it's not really true. As I was mentioning, a lot of this solving stuff are being done by more professional teams, like high frequency trading firms, market makers. And what we see, for instance, on Solana, there is pretty popular this proprietary or dark IMMs, as they call, which is like essentially it's kind of like AMM, but it's the price is constantly updating and it's like in centralized way. And for instance, like 60% of Solana USDC volume in summer was done through this AMMs. So one of the trends is like that more and more professional teams are coming. Yeah, and another what I mentioned that there are a lot of user experience improvements. Again, many people say that user experience is something that still blocks us from having 1 billion users. But again, I think that there are a lot of building blocks that can be combined. For instance, recently I tried a nice small feature when you can connect to any application, not having a wallet extension or a wallet. Essentially, it's like a passkey. You're using your biometrics data. You can create an account and then log in like from whatever device you want. And that's a huge improvement. It's not super adopted yet, but still nice to have. And where it's heading, it's hard to predict. I won't be a contrarian here, but I personally like the direction of real world assets. There is people talking about it all the time and for a long time, but like finally we have more and more like that regular users can like tap into treasuries very easily from on chain. And with this like Robinhood announcement that they're gonna sort of build their layer 2 or layer 1, that we might have more adoption of like there is still, if I'm not wrong, the like super easy way to buy, for instance, S&P on chain because of like regulatory and a lot of other challenges. But I think that it's also interesting direction we might go into. Yeah.
Awesome. So I was thinking of something else. When you mentioned the high frequency traders, right? You mentioned that those are the market makers, right? And
Hmm.
and I said earlier that I think the people on X were inflating the price of Avalanche, but those are all retail, right? So who's the real market maker? I mean, they could have this contest, but the IMMs could be inflating the price, or they could knock it down depending like on what the retail does. So who's actual market maker?
Well, this is hard question. Honestly, I don't know like all the activities or how exactly are they doing like to speculate, because when something happening like price drops a lot and some liquidation cascades, a lot of people blame market makers, but it's not necessarily them, because like by default, market makers, they just like provide liquidity, and like the market manipulation is something that a lot of theorists about. But again, I'm not in this business like to comment a lot how this avalanche in particular is happening. So but
Yeah. It could be anyone. It could be any. It could be any. That was just one. It could be XRP. It could be Solana. It could be whatever. But yeah, it's just something to think about. Who has more impact? Is it the community, or is it the IMM? So, um, but we can just maybe think about that and for a while. So I want to come back to you see some pioneering projects coming down the pipe, right, over this next cycle, and some interesting innovations. What are some of those projects? What are some of those innovations, and what makes them unique?
mhm. So one of the visions in crypto is that you like can easily buy any token on any chain, and you still cannot really do this even on centralized exchanges, like some sort of implementations of that, but it's in centralized way. But there is like still complicated on doing this in some non-custodial wallet. So the vision is simple, but reality is hard because you have many chains, and for instance, uh, interesting direction, I think it's been talked for a while. Think like shared sequencing, for instance, on layer twos like Base, Arbitrum, their team is running their sequencer, and if they go offline, you cannot essentially use the chain. Well, like in theory and in practice, you can submit transactions through like L1, but it's complicated. And recently on Base, there was a outage for like I don't know 30 minutes, like 1 month ago, like one of the most popular chains. And there was this vision of making this like validation more like decentralized, like similar like on Ethereum, but this vision was always postponed because not priority. And but I think this important building block for making this like cross-chain activity more possible between different L1s, L2s. And for instance, on Ethereum, one of the also problems that this block builders, there are like two or three of them, and it's kind of centralized, and there's no big security risk, but still it's potential issues. So one of the like projects that they're building essentially like decentralized block building on Ethereum, and it's also can be applied to layer twos. So I think this direction, I'm not naming any names directly, but this field, I think it's promising because it just not just improves some, not from decentralized vision-wise, but it also improves UX because you can do this cross-chain swaps more effectively. And yes, some of these projects are building some similar like block engines on Solana, so it can make blockchains a bit more faster and efficient. So I think that is interesting direction, and um,
Something I haven't heard about in a long time is any Solana downtime. So we'll see if that continues. But it's been a pretty good trend for a couple of years. So we'll see. So that's good. So I want to thank you very much for your time today. I enjoyed speaking with you. This is an amazing conversation, and thank you. I have one last question. How can people find out more information about you, about Calibrio, about your role, how you can maybe help them? How can they do that?
just on Twitter. Just can check my Twitter or follow if someone likes it. So yeah, just mainly I'm not that active on Twitter, but Twitter is the place to go.
Awesome. Thank
But
you very much for your time today.
yeah, likewise. Thank you.